Welcome back to another episode of my trading vlog where I talk about stocks you probably know, and I want to look at things that you are interested in. And so I'm going to be looking at PLTR. That was a requested analysis. At least I think that was the ticker. I'll have to go check, I guess. Maybe I should check now. Maybe I can just grab it by going into my recents. Will it be in here? Yes, it will. Palantir. Everyone's been looking at Palantir at some point in time. One of the older meme stocks, really. But we're going to start on AMC. I think this is what people want to see first. So we had this big ABC push higher. Going to show this in white in the minute degree. That led to about $7. We spilled from there, broke down, passed below the valley set at minute wave B. And now I'm saying, hey, we had the bounce that I called for yesterday, bringing us up to this $5 level, and I just want to say that there could be a little more upside here. It could be that the price is going to come up and test the breakout price from this previous uptrend, and I have this uptrend shown as a solid line because it's not external, it's internal. That is to say, rather than not cut through the price, it definitely cuts through the price, or the price cut through it, more like it. So yeah, we could have a little more upside in AMC, and then I think it's time that the price probably falls back down because it's no longer making progress to the upside. It's no longer in an uptrend, and it won't be in an uptrend again unless it can get above that 722 level. If AMC can regain this internal trend line, then be prepared for rejection near that high at $7 or $6, because guess what? This could be forming a big triangle. Look at how high implied volatility is. It's at 314%. It's very high, at least on this time frame. Let's go to the daily. You're going to see it's historically pretty high. The last time we got up here was like towards the top of that $72 range. We were up here at $70. The implied volatility was this high. Okay, so it's reasonable to say that, yeah, we're probably going to see a drop in AMC. Again, there could be a little more upside, and I did call for upside yesterday. GameStop doing a similar thing as AMC. I gave some analysis that I knew it would be wrong. You know, I got way too much right from, well, let's see here. From somewhere at the $23, $22 level, I said we're coming down, and we did. I said we're going to pop up, and we did. We made this quadruple bearish divergence, and it failed like I said it would. And then I made up some BS that was, you know, whatever. But we saw GameStop follow AMC, which is very common to the meme stocks. I believe we could see a little more upside here. The 2189 resistance level is huge for GameStop. I do think we have had at the minuet level an ABC correction higher. It's hard to say where that's going to end exactly. Seeing the RSI as overbought as it is currently after being sent into the oversold region, this just looks like a complete swing in the RSI, which tells me that we probably had a complete corrective phase as well. We're going to see some volume coming in, and this is something important too, is to watch volume. Volume should be rising in an uptrend, at least in the meme stocks. That tends to be the case. But volatility here is dropping. So AMC and GameStop, maybe a little more upside, but overall I'm looking for more downside. Let's go into SPY. I'm going to get into Palantir next. We'll also go into VIX and the dollar, and SLV and GLD. SPY, I had a really hard time looking at SPY because I can see it as potentially breaking out of a descending broadening formation or wedge. But honestly, the price target is only 416. I can see the price coming all the way up to 418 before rejecting. And again, maybe some more upside in the meme stocks, maybe some more upside in SPY as well before we get sent downward. Again, retail sales came out today. They were hot. And inflation is still high. Jobs are still in demand. The Fed's going to have to raise rates. It's going to do things to the markets. A lot of correction here. You're going to see that I've revised my SPY count to reflect that ABC. How many three-wave sets of three? How many ABC 1, 2, 3s are we going to see? I don't know. That was so dumb. Let's go to the dollar. And okay, I got to put the dollar sign there in front of the dollar to get it. I have a massive falling wedge. It's bigger than the falling wedge you're going to see other people drawing, and that's because I use Elliott wave analysis to, I don't know why I'm explaining this, 70 or 80% of my viewership is returning subscribers. So on the one hand, I don't need to repeat things, I guess, but on the other hand, there's still like the 20% of people who are new, and I want to kind of cater to them as well, because this stuff is kind of complicated and hard to understand, and I get that, and I want to try to explain a little bit. So if you just bear with me if you're a returning subscriber, but I use Elliott waveform analysis here to determine the modality and the structure of the waves. And that helps me not just connect dots on the chart, it helps me make informed decisions about where those important levels are and how I can track those trend lines and use the price as the indicator against those trends. At any rate, we have the dollar now pushing above 103, what was it? 09? 103.9? Just barely. I'm going to want to observe a stronger push higher, but if we do get that move up towards 104, I'm going to be looking for 105 or 107, and this would correlate negatively with equities. That is to say, SPY would drop against a rise in the dollar like this, and there is something really cool here. I think it's a true, yes, A, B, C, D, ooh, E. This could be an overthrow of E. Could the dollar really be about to fall? I don't know. I don't know. I am really, really mixed on the markets right now. It really could go either way, but I think the dollar strength is going to continue to push higher, and that's going to continue to hurt silver and gold and the equities that follow them, like GLD and SLV. You can see this big spill. I don't have this analyzed. The dollar is just destroying precious metals in terms of price, and that's totally fine. It looks like we may even have what's called a half staff formation through here on SLV. That is to say, we have a flag that's just completely tilted one direction. And if this is true, we're going to duplicate this flagpole and use this for a target. And it's super low. It's like 18. I am calling this a buying opportunity. I am always bullish on SLV and GLD. Well, not always. I guess like right now I'm short-term bearish, right? But long-term, very, very bullish. So this is a buying opportunity. And for this trend to end, I think the dollar would need to reverse. At some point, I do expect the precious metals to flip their correlation with equities, no longer follow the equities markets like SPY, or I should say the S&P 500, or that's not even a market. I mean, okay, so SPY is an ETF, the S&P 500 is an index, and then the markets are actually the exchanges. I don't know what terminology people are wanting me to use here, but SPY will flip correlation with precious metals and the dollar. It's going to be a huge thing when that does happen. It's going to signal the end of the market is soon, but only after a massive dive. Personally, that's what I'm looking for. We're going to look at VIX just for a moment here. VIX, I think, is going to make a strong measured move up. We did come down off that 2150 level. As long as we don't fall below that prior low towards 1750, VIX to me could go up and fly away. That's a massive falling wedge we've got here. And it's bigger than the falling wedge of other people see drawn as well. It actually matches the falling wedge in the dollar. Yeah, so the correlation between VIX and the dollar, that's interesting. When you see corrections occurring like this, it's an opportunity for certain equities, indices, for certain metals, whatever it is, to more or less find a place where they more naturally settle. And then when the next big push happens in, per se, the equities markets, anything correlated with those equities can then also move contrary to that, but in a position where it will correlate more strongly. Like you have to go through periods of correction and divergence. Correlations tend to diverge during corrections, and then they tend to go higher during motive modes or during progress. This is my observation. That's kind of heady. Don't worry about that. Don't worry about it. That's just me cataloging some thoughts. I did want to go over Palantir as well. I had a request for Palantir. Here we go. This is an old school meme stock. This thing exploded. Honestly, finding a low near $6 and now trading near 10, that's a pretty big move up. But don't get too much FOMO. Don't get too much FOMO. I saw an ascending broadening wedge through here. We did have an upward breakout forming a half staff flag, which I don't know which time frame I was on that I saw that, or after hours turned on. No, extended hours are not on. Okay, there. That little flag happened in extended hours. You might be saying, Cap, that's not really a flag. It's not really a flag. Like the flag actually happens like in here, but to use a high and tight flag, Bulkowski chart pattern analysis, you're gonna be looking for a breakout from the top of the flagpole. And I use an extension, and I have to just draw that sideways. So price did break out, pull back into the pattern, and then be thrown higher. This pullback hurts overall performance. Theoretically, you're going to see in blue here just barely. 1065 is that target. And I have another target right near there based on this A, B, and C zigzag. That would take the price to 1073. And if you're following, geez, where is this third price target coming from? I have three targets here. Oh, the ascending broadening wedge had a bullish breakout. So the ascending broadening wedge has a price target of 1073. The high and tight flag has a price target of 1065. And then I had one more price target at 10.95. I don't really know what that was. At any rate, there are 3 targets here that are all right next to each other, so it doesn't matter how you analyze it. I think it's more or less the target, 10.50, 10.95-ish, but again, we had a little throwback, so somewhere south of there to make a lot of sense. Looking at the RSI, it is very overbought, and we're going to have a serious case of bearish divergence unless we get above that 82 level. The price is setting a new high. You see this at C. This is point A. This is C. And well, the RSI hasn't made a significant high yet from that time. So we call this bearish divergence. It's likely going to form some sort of pattern in the RSI. It's my favorite when I see a pattern in the RSI and then it breaks down and it's like massive slide time. Volume was a little lighter today than it was yesterday. Implied volatility is not moving that much compared to the price at this point. So yeah, red flags on Palantir. It looks like it's near the top of its push higher, and I would personally, I'm not going to buy into this. Nope. So I think that covers all the bases. This was a little longer than I wanted it to be, but that's okay. I want to cover everything that you want to see. Let me know if you want some analysis in the Discord. Join the Discord. If you're not subscribed, subscribe. Most of my viewership is as a subscriber because, well, honestly, you're not going to get much straighter analysis of this. At least that's what I think. I watch other channels. There are a few that I like. Most I don't. But hey, if you are on YouTube and you see me on your channel, definitely say hi. I would love to collaborate with anyone, really. If anyone would care to. It doesn't seem like I do. Okay, I'm really out of here.